Hello, this is Andrew Mitchum here, Head of Trading at JAS Funds with a report for July 2017. Well, July started off really well. We had some great gains and some nice movements within the market. But as we headed towards the end of July and now into August, we're hitting that traditional, very tough time in the market. The market's gone flat for about the last 3 weeks. Very few good trading opportunities, and it's not to be unexpected. It happens most years due to the Northern Hemisphere summer holiday season, where the big banks, financial institutions throughout Europe and throughout North America generally have their summer holidays or vacations, and it generally means that the market goes quite dull, quite flat, and very hard to trade. Now, this has definitely affected us throughout the sort of second part of July, and you'd have noticed that results ended up giving away some of the gains that we made in the first part of July, and we made some good gains. But unfortunately, due to the conditions, there's been a lot of whipsawing action within the market, and it's taken a lot of those gains away. So to try and counteract that, what we've done is we've gone back and analysed the trades that we've taken so far this year. And by far and away, above everything else, the most consistent, profitable trades have been on the daily time frame charts. Personally, they've always been my most favourite time frame charts, and this year has been no exception. And so what we're going to do now, from now onwards, especially now that the market's in this summer holiday, Northern Hemisphere summer holiday time, where it's a little bit harder to trade, we're going to be stopping trading the shorter time frame charts and just focusing on the daily charts. The reason for that are many. From your point of view, it means more consistency. It also means less trades being taken, so therefore less broker commission. So you will from now on see less trades taken on your account, but we're aiming, of course, to have more consistent gains. Now, our daily trades for this year are up 13% without any compounding. And so it's quite a nice figure. It's not exceptional, but it's quite a nice figure considering we're trading with very, very low risk per trade. It also means that if we look back through to last year, I had personally a 34% gain on the daily trade suggestions throughout 2016. And if I take my analysis back to 2011, when I started posting for my Forex Trading Coach clients, I'm averaging, with compounding, since 2011, a 55% gain per year. So this year is obviously down a little bit so far, but it's still positive. And so therefore what I aim from now on is to take less trades, have higher probability trades. The great thing with the daily trades is it also means that any fundamental news or any whipsawing in the market, which we've seen a lot of this year, it generally is affected less on the daily time frame charts because we have bigger stop losses and we're able to ride out those waves within the market. It also means we can focus on the strength and weakness of the market, of which currency pairs are showing particular strength, which is showing weakness, and try and ride those out within the course of a week. So going forward, you will definitely see less trades on your account, but our aim, as always, is to keep your drawdowns very, very low into a minimum and to have some nice, profitable, consistent gains going forward. So this is Andrew Mitchum, Head of Trading at JAS Funds.